हाय।
बस इंडिया तो स्वागत के लिए सेपरेटली बताया।
Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a new week, and after the range-bound movement that we saw last week, today the gift nifty trends are indicating that we shouldn't be expecting any major moves or any fireworks either as well. Well, the tariff deadline between India and US just looms upon, just another 48 hours to go before we could see a mini trade deal between the two countries. But yes, reports do suggest that both the countries have wrapped up negotiations and a trade deal would be on the way. Another factor that we would be watching out for today this week is your India Inc.'s first quarter results. We've had some business updates which has been flowing in, and TCS is the first to report the results on July 10. Now, how the markets have been? US markets have ended Friday higher, but futures this morning are quite subdued due to tariff uncertainty. Asian markets too have edged largely lower this morning as well. One important development that did come in from the oil markets, however, was that OPEC has hiked production for August more than what the street was estimating, and that has brought crude prices down by 1%. Remember that the West Asia tensions, that is your Iran and Israel conflict, did spike up the crude prices, and now Brent crude prices are off about 16% from those high levels. Coming back to home, we will be discussing some stocks in focus. IndusInd Bank, Godrej Consumer, Dabur, all of them did come out with its Q1 updates, and we'll take them up slowly in the later part of the segment. Also, we'll take up your stock related queries like usual, so keep posting them and we'll be discussing it with our market expert. Now, before we delve deeper into the show, let's take a quick check of the headlines this hour. The US is expected to send tariff letters to partner countries as early as today, which will then take effect from August 1st with countries that have not struck a deal. India-US have likely completed negotiations on a mini trade deal, and the next trade deal is likely in 24 to 48 hours. Sources have said that India has refused to offer any concessions in sensitive areas of agriculture and dairy, but has offered a fair deal that offers support for labor-intensive sectors. Asian markets have opened largely lower amid tariff uncertainty and absence of any major cues from Wall Street. Meanwhile, Gift Nifty is indicating a subdued start for our own markets. Crude prices have slipped after OPEC Plus surprised market by increasing supply more than anticipated in August, raising concerns about oversupply. Meanwhile, gold prices gain as Trump's tax bill ignite fiscal deficit worries and amid tariff uncertainty. And in some first quarter updates, IndusInd Bank has reported both decline in advances and deposits. Meanwhile, Godrej Consumer said that they expect double-digit revenue growth in first quarter, and good performance continues to prepare for Jubilant Foodworks as well. All right, if you look at the last trading session, of course, the last session did end for Nifty with modest set of gains. It did end above that 25,450 mark in the last session, but it was a very fairly subdued session given that the crisis and the SEBI's action on Jane Street was seen in the last session. And of course, the broader end of the markets did end in the flat and territory. Midcap and small-cap indices, both of them. Among sectoral indices, Realty, Pharma, these were the sectoral indices that gained the most. However, what dragged was your auto and the metal indices. And for the overall last week, we did see Nifty was down nearly 0.5% or so. We saw some two important events that did come up in the last week. That was your US-Vietnam trade deal and of course the Trump's spending bill as well. But this week, two main events like I was pointing out, we will be tracking, that is your US-India trade deal and of course the first quarter earnings, which will be driving markets ahead also. Of course, if you look at the primary markets, two mainboard IPOs will be opening this week. That is your Smartworks and the Travel Food. Travel Food will be opening its IPO today. It's an operator of airport-centric QSR restaurants and lounges, and the price band has been fixed about 1,045 to 1,100 rupees or so. And if you look at the grey market premium, it's about like 4% premium in the unlisted markets. That is what it is commanding at this point of time. So yes, the IPO will be opening today and it will close on July 9th itself. But yes, coming to some of the fund flows data, FIs, they stood out to be the net sellers in the last session. 760 crore rupees in the cash markets they have sold. On the other hand, DIIs also sold stocks, which is about 1,000 crore rupees in the cash markets. If you look at the put call ratio, that has dropped to about 0.93 levels from 0.99 levels in the previous session. And RPL Bank, that is the one stock that continues to be a part of the FNO ban. Just 3-4 minutes to go before we address the open at this point of time. But if you look at the pre-open rates, again, a very subdued start, very flattish start, which is indicating for the markets today, given that we don't have enough triggers to move the markets ahead at this point of time. But before we try to understand how the markets are going to behave today, let's quickly get on board with a technical expert of the show. Joining me is Rajesh Palviya of Axis Securities. Rajesh, good morning. Nifty was down nearly 0.5% last week. What are the levels that we can track for this week itself?
So it was volatile week and Nifty was able to defend 25,400 put-based concentration on a weekly closing basis. So I think for current week, 25,400 is likely to act as an immediate support area. If we able to hold above this level, then yes, some buying interest may resume to the street, and then possible up move towards 25,550 for 25,600 we may see in the current week. Though 25,500, 25,600 has attracted major call writing activity, so these levels are likely to act as a supply zone for the near term perspective. Any move about 25,600 may trigger the short covering action in the market. But till the time Nifty is holding about 25,400, I think one should try to buy some stock specific approach, because a lot of stocks are showing strength. So 25,400, 25,350 are the immediate support area for Bank Nifty. 56,700 is the key level to watch for the current week. If we able to defend this level, I think here also some buying interest will come back. And on the higher side, 57,200 is the immediate supply zone. If he crosses those level, then short covering action may trigger in the market.
All right, let's see the first trades that is dropping in our feed at this point of time. Nifty down about 25,450 mark at this point of time. 0.1% cut that is coming in on the Nifty 50 levels. Of course, this doesn't come as a big surprise, given that we did have a muted global handover also to start off with. We did see that the Asia Pacific markets were also largely lower, given that there is tariff unclarity which is prevailing in the markets today. So all of them have been tracking the July 9th deadline, and that is where the tariff contours and of course the trade deal agreements across the countries will be watched out. But yes, coming to the markets at this point of time, all of them, a very subdued opening. Bank Nifty index also with about, 0.2% cut that is coming in. However, what is doing well, that is your Nifty FMCG index, given that we did see some Q1 updates that did trickle in from Growthish Consumer, where the company does expect double-digit revenue growth in the first quarter. And of course, Dabur also did come out. So some, recovery was seen from the rural and of course the urban markets on a sequential basis. And we'll watch out for some of the FMCG stocks going ahead in today's trading session as well. But yes, Nifty Realty Index continues to be the top loser at this point of time. 0.5% cut that is coming in for Nifty Realty Index. Nifty IT Index, IT Majors, which is supposed to report some of the Q1 results this week itself, that also comes with a subdued opening with about 0.4% cut. Nifty Auto Index also with about 0.2% cut. And of course, India Wix levels, if we look at 3% jump that is coming in for the India Wix. If you look at the broader end of the markets, mid-cap and small caps also continue to underperform at this point of time. Small caps particularly seeing a larger cut, about 0.5% or so. Coming to the top gainers and losers on the Nifty 50, if you look at the gainers at this point of time, HUL, Asian Paints, all of them doing well. Asian Paints, with about 0.5% cut, that is 0.5% gains that is coming in for Asian Paints. Other than that, Tata Consumer Products, all of them doing well. So some of the consumer stocks seem to be doing well, and that is dominating the Nifty 50 gainers list at this point of time. On the other hand, on the losing end, if we see Bharat Electronics with about 1.5% cut, Tech Mahindra with about 0.8%, nearly a percent cut coming in for Tech Mahindra. Tata Steel, Titan and Shriram Finance, they continue to be some of the top losers on the Nifty 50. But yes, Nifty FMCG index, that seems to be doing well today in today's trading session, bucking the trend of the overall market. Rajesh, what do you see on the FMCG index? We've seen some good business updates that came in from Godrej Consumer Products as well, and Dabur and Marico also seems to be doing well.
Yeah, hi. So looking at the FMCG stock basket, yes, there is some buying interest we have seen in last couple of days, and most of the stocks are, consolidating in their broader trading range. Looking at the behavior for Marico, we do believe that, Marico is looking more, positive on the technical structure as long-term structures are intact on the bullish side. And the way stock is holding about to 20-day, 50-day moving average on the near-term perspective, I think if we get any move above 740 kind of zone, then I think this stock has potential to extend its gain towards 780, 800 kind of level also. So buy and accumulate would be the strategy in Marico at this juncture. 705 should be your stop loss. Even if we look at the other stocks like Godrej Consumer, even Dabur also, here also some buying interest has been there. Godrej Consumer is also showing buying interest after this opening. And looking at the near-term, short-term structure, 1230 is the immediate support area. If it continues to hold above these level, I think we can see more upside towards 1285 to 1300 kind of zone for the Godrej Consumer. So I think as market is clueless, there is no major trigger at this juncture. We are now at the beginning of this earning season. So I think some buying action, monsoon is panning out across the India. So I think some rural theme related to buying action is happening in the FMCG pack. And I think after a long consolidation, we are witnessing a near-term breakout on the chart. So one can focus on FMCG basket at this juncture. Marico would be our first choice. Second would be Godrej Consumer, and third would be Dabur at this juncture.
Okay, all right. Let's take one stock in focus, that is your IndusInd Bank, because the lender did report a decline in both the advances and deposits for the June quarter. And we did see that the advances fell about 4% year on year and even 3% sequentially. And deposits also edged lower by about 0.3% cut from the previous year itself. But yes, it's been a choppy trade for IndusInd Bank also. Rajesh, how do you see IndusInd Bank on the counter? They did submit the CEO names before the RBI, given the June 30 deadline that was given to the lender?
So I think the major move is happening because of news flow, which is coming in the IndusInd Bank. Looking at the near-term, short-term structure, I think stock is still holding the strength on the near-term, short-term chart. Though there was a lot of news flows are coming to the counter, but looking at the near-term, short-term structure, 835, 840 is the key level to watch for. If it's able to hold these level, I think some buying interest is likely to be there in this counter as breakouts on the near-term chart is still intact. So 830, 35 should be the stop loss, those who are holding the position. On the higher side, 875, once the stock crosses above 875, I think here we could see some short covering action, and then momentum can extend further higher. But till the time breakouts not happening, 830 to 875 would be the consolidation zone for the IndusInd Bank.
832 levels, that is what we need to watch out for IndusInd Bank. Let's take some viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking the view on Chennai Petroleum. Chennai Petroleum, how does the stock look like? Past 1 month, the stock has been doing quite well. Of course, the company does plan to set up some retail fuel outlets, Rajesh. But on the counter, can we expect an extension of the rally?
Yeah, definitely. So there is a breakout on the weekly chart, and then looking at the breakout chart structure, we believe that till stock is trading above 737.25 kind of level, I think there is a possibility that stock may extend its gain. 800 to 820 would be the next target for the stock on the near term perspective. So buy and accumulate would be the strategy for Chennai Petro.
Okay, all right. Let's take another viewer query then. Satya is asking the short and medium term chart of Mahanagar Gas. Mahanagar Gas, how does the counter look like? So far this year, the stock has seen a good rally, about a 20% uptick. And of course, from June onwards, the stock has been on an uptrend. But from a target levels, anything that you're watching out for, Rajesh?
So I think most of the oil and gas stocks have done well, and the way oil and gas stocks have shown buying interest in last couple of week, I think there is a possibility that we may see this sector to perform on the near term to short term perspective also. Mahanagar Gas has managed to give breakout of almost 12 to 13 week consolidation range on a weekly chart, and looking at the breakout, we do believe that till stock is trading above 1500 mark, there is a possibility, after a brief consolidation, we could see extension of really towards 1580 to 1600 kind of zone. So MGL, one can, buy and accumulate at this juncture with stop loss of 1500.
Okay, all right. Stop loss of 1500 for MGL then. Let's take another viewer query. Pooja Khanna is asking that she's bought Sagility at 45 rupees and she's asking what should be the stop loss and the target for the next 6 months. If you look at from a year-to-date perspective, of course, the stock has been an underperformer, and since she has bought it at 45, she's seeing a little bit of a loss, but however, very flat at this point of time. But do you expect the underperformance to continue, Rajesh, going ahead, or anything that you want to watch out for?
So a lot of accumulation activity is happening in this counter, and stock has taken the support from its multiple support area of 37, 38, and I think a lot of buying action has been there. Volume action is encouraging in last couple of week. Looking at the weekly structure, I think 45 is the key resistance area. Once stock crosses above 45 level, then possible upside towards 52 to 55 we may see in the near term to short term perspective. So at this juncture, those who are already bought the stock can hold the position with stop loss of 38. And just a disclaimer, I am also holding this stock in my portfolio.
Okay, all right. Let's take another viewer query then. Satya is asking the view on office, and he's asking whether he should add or hold or switch the counter. If you look at office space solutions from a year-to-date perspective, the stock has been oscillating in a range of about 600 to 700 rupees. But anything that you're watching out for, Rajesh, because the 52-week high on the stock was about 946 rupees. Can we expect it to reclaim those levels soon or later?
So still, stock is in downtrend, and now stock has almost reached to the level of its multiple support zone, which is very critical in nature for the stock, as still trend is on the bearish side for the near term structure. 600 is the key level on the downside. So I think if stock manages to hold 600 level for some more time, so some buying interest we may see in this counter. On the higher side, now stock is negotiating with its falling trend line on the daily chart. 640.45 is the key resistance area for near term structure. If stocks crosses above 645, then some recovery or pullback trade we may see in this counter towards 665 to 670. Overall structure is weak at this juncture. 670 is the level where one should try to review it or book some profit if you see any pullback in the near term to short term.
All right. Let's take another viewer query then. Debuk is asking the view on trend for an investment at this juncture, because given the stock has seen a slew of negative reports. Of course, we did see in the first quarter business update that the management has indicated some slowdown in the near term, and as a result, because of which brokerages have remained cautious on the counter. And in the last session also, the stock witnessed a drop of about 12% or so. But Rajesh, for going into the near term, what can we expect on the counter? It's been an underperformer. Can we expect an underperformance to continue?
So if we look at from medium term to short term perspective, stock is still consolidating in a broader range. 5,000 to 6,000 is the range for the stock since last 5 6 month, and stock not managed to give breakout of this higher band of this consolidation. So until the stock not crosses above 6,000 level, I think we may see further more consolidation in this counter for some more couple of month. On the downside, 5,000 is the key support area. On the higher side, 6,000 is the resistance. So I think wait for some decline to near to 5,000, 5,200 level where you can one can buy with stop loss of 4,800 in the pullback. 5,600 to 5,800 would be the supply zone where one can book profit. So I think consolidation in range of 5,000 to 6,000 would be there in trend, looking at the last 4 5 month behavior of the structure.
Hmm. 5,000 to 6,000 consolidation expected from Trent. But let's take another viewer query at this point of time. Your Nitin is asking the view on Aster DM, and he's asking the view for the next 3 months. If you look at from a June perspective, Rajesh, the stock has recently seen a breakout. What can we expect the next levels to be?
Yeah, there is an breakout in Aster DM and stock is almost trading near to its all-time high trajectory only. The way stock is making high top, high bottom formation, I think trend is likely to exhibit on the bullish side only. And till stock is trading above 600 level, I think one should hold the position. Those who are holding this for positional perspective. Once stock manages to cross above 660 zone, I think we could see a extension of rally towards 700 to 740. So Estadium, yes, looking bullish. One can hold the position.
Okay, hold the position for Astadium then. Let's take another viewer query. That is, Manish is asking the view on the key capital related stocks, and of course, given the Jane Street ban and its impact related to sell off in Novama, is asking whether it should be accumulated at the current levels. What would be your suggestion, Rajesh, on the counter? We did see quite a bit of a drop in the last session for all the capital market stocks.
So I think this is a knee-jerk reaction, and market is trying to adjust what kind of impact they are going to have on their businesses. So the stocks which are directly linked, or the BSC, Angel One, Nuvama Health, all these stocks have corrected based on this the development which has happened for the Jane Street. So yes, for some time, yes, we may see pressure is likely to be there in this counter. Looking at the structure for BSC, stock is now slipped below to 20-day moving average and now trading near to 50-day moving average. So on the downside, 2570 is the 2570, 2550 is the immediate support area for BSC. If at all stocks slip below to 2550, then we may see further more downside in this counter. But on the higher side, 2800 is likely to act as a resistance zone for the BSC for some more time. Looking at the Angel One structure here, also we have witnessed, supply pressure in the previous day, and now stock slipped below to a 50-day moving average also. So Angel One, till stock is trading below to 2800, 2840 kind of zone, may see some more, unwinding action in this counter. And on the downside, maybe stock can slip further towards 2650. But I think for those who are looking for the long-term perspective, they can use this decline as a buying opportunity, as financial inclusion is happening, and we are seeing there is a growth trajectory for capital market. And going forward, I think this the slowdown which market is expecting in the volumes of derivative side, that will again back to the normalcy, and I think market will try to find their its own way. So I think buy and accumulate would be the strategy, those who are looking for the long term perspective. So BSC, yes, one can buy in the decline when you get opportunity in the in the near future on the downside.
Hmm. Okay. All right. That is the view coming in for the capital market stocks at this point of time. Let's take another viewer query then. Komal Makija is asking the view on Lodha. She's bought it at 1460 levels, and she's asking whether she should hold it for the next few months. She's of course bought it at a very higher levels at this point of time. But Lodha, what is the view on the counter? Of course, the stock has entered a bit of a consolidation, Rajesh, given the good rally it saw from April lows.
So I think after a rally, now stock is in profit taking mode. Now stock is trading below to 50-day moving average also. But looking at the near term, short term structure, now stock is trading near to its important support area, which is placed at around 1350, 1340 zone. So if at all stock able to defend these level for next couple of days, so I think some buying interest we may see in this counter. As looking at the volume actions are not that much great. So that's why we are seeing that stock is holding at the support level. So 1350, 1340 should be your stop loss if you have bought this counter for trading point of view. On the higher side, 1420, 1440 is the immediate hurdle. If at all stock crosses above 1440, yes, we may see some short covering action, and then stock can extend its gains towards 1500 level also. But as a whole, we are bullish on the real estate theme. Yes, some profit taking is happening in most of the counter after the rally. But I think after a brief consolidation or after this profit taking activity, I think again real estate stocks may attract the buying action, and we can see a resumption of uptrend in the most of the stocks from the real estate pack also.
Okay, all right. Let's take another viewer query then. On that note, Kartikeya Singh is asking the view on Senco Gold after the recent consolidation. He's asking whether the stock can go up. We did see a good Q1 update that is coming in from Senco Gold also, where the total revenue has risen by about 28% on a year-on-year basis, and even the retail revenue has risen in double digits. But the stock hasn't been an underperformer so far this year. Rajesh, anything that we can watch out going ahead?
I think there is a breakout on a daily chart of falling trend line, and looking at the breakout, yes, we may see a up move in the near term as well as in the short term also. So till stock is now holding about 345, 350 zone, I think there is a possibility of upward target of 380 to 390 for Senco Gold. So one can hold the position, even one can deploy the fresh long trade also in this counter for upside target of 380, 390. Stop loss should be 350.
Okay, stop loss should be 350 for Senco Gold. All right, just one last question before we let you go, Rajesh. Anything that you're finding interesting in the market and you want to point it out as your buying pick?
So I think Reliance Industry is looking very attractive. The way stock is now comfortably holding above 1500, I think we may see a good momentum in this counter towards 1580 to 1600 kind of zone. So buy and accumulate would be the strategy for Reliance Industry at this juncture. And a possible target 1580, stop loss 1500. Another stock is from the pharma space, that is Glenmark Pharma. Stock managed to view breakout of rounding bottom formation on a weekly chart. So based on the breakout, we believe that if it's continues to trade above 1800 mark, Glenmark can extend its gain towards 1900, 1940 kind of zone on a positional perspective. So here also one can deploy some long position in this counter. Again, looking at the structure, I think we do believe that some of the banking stocks are also showing good strength. So Indian Bank, one can look at the current juncture, the way stock is almost trading near to its all-time high trajectory. We believe that this stock has potential to give breakout of its previous swing high, and I think 665 is the immediate hurdle if it crosses. Here also one can deploy some long trade. Possible target towards 685 to 700 we may see for Indian Bank. So buy with stop loss of 635.
Okay, those are the stocks that we need to watch out for. But with that, we have to let you go, Rajesh. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, the markets have recovered. It's off its day's low at this point of time. It has flipped into the positive territory. Sensex up about 53 points, very mildly in the green. And of course, Nifty also above that 25,400 mark. But of course, very flattish in the green at this point of time. If you look at some of the sectoral indices, Bank Nifty has definitely, trimmed its losses. And it is flat in the negative territory, and even auto index has also trimmed some of its losses, and that is what has helped the markets recover a bit into the positive territory. On the other hand, if you look at some of the sectoral indices that continue to do well, that is your Nifty FMCG index 1% at this point of time, Nifty Realty index with about 0.4% gains that is coming in, and Nifty oil and gas seems to be doing well given the fall that we have seen in the crude prices after OPEC's output production hike for the month of August. But with that, let's quickly move on to our next guest of the show. We have Harish Krishnan, Co-CIO and Head Equity of Aditya Birla Sun Life AMC joining us. Harish, good morning. How does the market look like at the current juncture? We have earnings season which is beginning this week, and the US-India trade deal which could be on the way. What all has the markets priced in?
Good morning. So yes, as you highlighted, these are the two key event stroke catalysts that one is watching out for. As far as the Indo-US trade deal is concerned, from whatever developments have happened over the week, it does appear that a mini trade deal is what's more likely to get culminated over the course of this week. Just in terms of what's getting priced in our assessment, developed markets like the UK have got a 10% tariff rate. You've got countries like Vietnam, which are at 20% tariff rate, and then a 40% transshipment rate. I guess anything closer towards the developed market in terms of where the eventual tariff rates settle at will be termed as a positive kind of development from an Indian economy point of view. And conversely, if we are more closer towards what Vietnam is potentially currently at, I would think that markets will kind of take that as a negative development. So that's the first thing as far as the Indo-US trade deal is concerned. With respect to the earnings season, we do think that the earnings, in the June quarter are likely to remain slightly tepid. We have seen an improvement as we moved on from the December quarter to the March quarter, and now we think there is going to be a mild improvement from the June quarter. But we really think that acceleration in earnings is more likely to come from the festive season, which is the December quarter and then the March quarter, primarily because of three key reasons. First is that the tax break in terms of the consumption shops will start hitting in, and therefore it should start seeing some kind of an improvement. More importantly, we've seen the Reserve Bank cutting interest rates quite significantly and infusing liquidity, and that should come through with a lag, hopefully by the festive season. And thirdly, from a currency depreciation, we think that currency depreciation overall benefits earnings. And as and when the rupee kind of stabilizes, we think that's going to be a net positive as well. So while the June quarter may not really hold a lot of, quote unquote, earning surprises, so to speak, I guess what we would be watching out more is in terms of the commentary that's likely to come through in terms of how they are positioned as far as the festive season is concerned.
Okay. Harish, which sector are you largely bullish on in this particular quarter? Because the large consensus has been for the banks, but now that you look at the first quarter updates which has been trickling in, credit offtake is something that the industry is struggling with. So would you continue to retain that particular view for BFSI sector especially?
We are positive on private sector bank, but as you rightly highlighted, it does appear that the banking sector numbers aren't going to be anything stellar, primarily because they're coming off a very, very high base over the course of the last 2, 3 years, where everything that seemed to be right for the banking industry came through, which is high credit growth, very low NPAs, and very high net interest margins, and all of them are coming under check. Having said that, I think, even when the numbers were stellar going into FY23 and FY24, we did see the private banking, underperform the overall market because markets were of the view that these were supernormal numbers and that needs to get moderated off. And therefore, in that context, I think a realistic number that's going to come through as far as this year is concerned, I don't think is something that the market will be very negatively surprised with. And therefore, given the cheaper valuations as well as the potential of all the catalysts that I said about RBI, I think markets will buy through this dip. Of course, they've kind of performed well over the course of the last 6, 9 months, and therefore, can they take a breather? It's quite possible, but we would be looking to buy into corrections as far as the private banks are concerned. The other two sectors which seem to be dark horse segments for us, one is in terms of cement. This is a space which has kind of underperformed over a long period of time over the course of the last 3, 5 years. Of course, cement is a play also on energy consumption because in every element of cement, be it in terms of production at the kiln or in terms of bagging or in freight, there is a significant amount of energy that gets consumed, and therefore lower energy prices should tend to benefit overall cement bottom lines. Also, we are starting to see a reasonable amount of pricing salience coming through as far as the cement sector is concerned, and therefore we think that cement, after a spell of prolonged underperformance and with a significant consolidation of the sector, should augur well for the medium-term prospects of cement. The third dark horse segment is that of metals, wherein we have seen clearly a market shift as far as fiscal spending is concerned by the developed markets. Europe is going in for a massive amount amount of spending, especially in defense, something which has kind of been absent over the course of the last 3 decades or so. With US, the new bill that's got passed on, there is going to be a further impetus on capex spending as far as private sector is concerned. This capex spending, to my mind, will be net commodity positive, as well as the fact that typically commodity prices and dollar are inversely correlated, and therefore, as the dollar kind of weakens, we think that commodity prices should strengthen. So I think a combination of these three makes us positive on metals as a contrarian dark horse pick.
Okay, okay, right. Harish, what about the consumer staple sector? Because we saw that the Dabur is seeing single-digit volume growth. Godrej Consumer is expecting a double-digit revenue growth in the first quarter. How are you watching out the demand trends from both the rural and urban pockets, and how are you watching out of all of these stocks, like for instance your Dabur, Marico, HUL, all of them going into this year?
So I think companies have prioritized margin expansion over volume over the course of the last I would say 7-8 years. Ever since post demonetization, we've seen a very strong margin uptick for most of the FMCG companies, and that's come up at the expense of both volume growth as well as seeding potential room for competitive activity, and therefore we've seen a lot of new D2C players emerge, which have kind of impacted revenue growth. What we've seen in terms of commentary of FMCG players is that they are now shifting gears on two fronts. One is to use their cash flows to acquire companies, especially on the D2C front. So we've seen some of the larger players, spending their balance sheet on acquiring growth, which to our mind is a welcome development. Secondly, they seem to be suggestive that margins are likely to correct as they reprioritize over volume growth. Again, something which we think works to the advantage of longer term investors in the space. So while the near term there is going to be this wall of worry to climb, that their expensive near term revenue growth is kind of low single digits or early mid single digits. I think the medium term narrative from a company point of view, I think they are starting to do the right things and culminate that with the spell of under ownership in that space and the huge underperformance into that segment. We would be buyers into the correction as far as various consumer staples is concerned, looking out for a better FY27 and 28.
Okay, all right. Better FY27 and 28. Harish, what about the IT sector? It's a much talked about sector, and the street is largely bullish, more towards the tier 2 and mid cap IT names over the large caps like TCS or even Infosys for that matter. What are you anticipating from IT companies in this quarter going onwards? TCS on July 10th, of course.
Yeah, so I think the fact that early into the year there was prospects that US could go in for a massive kind of a recession or a significant slowdown, and that seems to have got kind of pushed out with the various trade deals that are likely to get signed up, as well as some amount of pragmatism that the US administration is taking as far as pushing out the deadlines, etc., is concerned. And this therefore means that the fear that we could see a very sharp kind of fall in revenues that potentially might not come through, and therefore we think that most companies' revenue, while it's nothing very stellar, but they would kind of bottom out from indications of what they gave from the March quarter, and therefore I would be thinking that the revenues may actually start potentially surprising. Again, we are not talking of very large numbers. We are talking about 1.5%, 2% going to maybe 3 or 4%, that kind of range. But in the IT sector, these 0.5%, 1% revenue surprises tend to be magnified a lot when it comes to stock price reactions. So that's as far as IT sector revenue profile is concerned. We think that there is a larger sense of margin defense that's likely to come through as far as IT sector is concerned. Primarily because compared to pre-COVID till now, we've seen offshoring as a trend go up meaningfully. A lot of the cost items, be it in terms of say travel, general administration, are trending significantly lower than what they were pre-COVID, and yet margins are down significantly compared to pre-COVID for the IT sector pack as a whole. Primarily because there's been a significant amount of hiring that happened in 2020 and 2021 in the wake of that significant demand that came through amidst COVID. We think a lot of that is going to get corrected, and therefore the overall margin base is likely to start bottoming out and starting to trend upwards. So that's really the call as far as IT is concerned. Having said that, I think the one key area that we want to take a greater sense on is where the dollar eventually settles at. We've seen the dollar index kind of weakening by close to about 10% in the first half, which is a very large move. The rupee is kind of held reasonably stable. If we are going to see a further weakening as far as the dollar is concerned, it'll be interesting to see where the rupee eventually stabilizes. So far, Indian IT has kind of worked in a rupee depreciating environment. Should there be a potential for a rupee appreciation, I think that may not necessarily spell great terms for the Indian IT services as a whole. So I think it's still wait and watch for us at IT services is concerned. Overall, we think that expectations are quite low into this segment, and therefore there can be a potential for some surprises on the positive side that may happen from a near to medium term perspective.
Okay. Harish, you said that IT is still a wait and watch for you right now, but anything else where you're still believing that the growth is still elusive at this point of time?
So I think on the industrials and the infrastructure side, we've seen some amount of private capex starting to come through. But we need to see more of that come through. So I wouldn't say it is really wait and watch. It's more a function that stock prices have gone up significantly ahead of the capex cycle announcements, and therefore in that context, as we see more and more developments coming through as far as the capex come online, I would think that the capital goods is a space which might potentially see some kind of sell on rise from our perspective. Similarly, from real estate has been on a stellar kind of a move over the course of the last 2.5 years. We think that they've reached a lot of price points where demand might be a kind of a weakening from here onwards, and therefore real estate is another area where we are a bit I would say a bit watchful of. We want to see how absorption continues even at very high levels of price points, and so these are the two segments where we would be using rallies, so to speak, to trim down our exposures in these two spaces.
Okay, capital goods and real estate. All right. With that, we have to let you go, Harish. But thank you so much for your time and a wonderful conversation, like always. All right, let's take a quick check of the markets at this point of time. Well, Sensex is down by about 50 points or so, and of course we have flipped once again to the negative territory. So the swings in the market is quite prominent at this point of time, and Nifty is also above that 25,450 mark, but once again a very choppy market, so to say, at this point of time. India Wix is up about 2.5%. Bank Nifty and Auto Index continue to be mildly in the negative territory. Nifty FMCG continues to be the star performer for today with about 1% gains, and of course Nifty Realty Index also with about it's trimmed some of its gains, but up about 0.2% at this point of time. But if you look at the broader end of the markets, mid caps and small caps, both of them continue to be in the negative territory. Not much performance that is coming in from the broader end of the markets as well. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market has developed and what the stocks were in focus. Until then, signing off.